Hey everybody, this is Jim at SP500chart.com. It's about 4:20 on March 26, 2014. Let me read this to you, then we'll dive right in to the chart. The website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, today, another day with significant swings, and it really, if you look at this chart, and we go back to the very first of the year, the markets in almost 3 months have essentially gone nowhere. If you look at it, you'll see that on January 1st, we started right around the 1840s. They're in the 1840s, and we're here at 1852. So throughout 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 and a half weeks, the markets have gone up about, where the S&P has gone up about 7 or 8 points. On the positive side, we're still above our support area. That's this little fuzzy rectangular box that I'm sort of highlighting right here. We're above that. But on the negative side, the S&P just doesn't really. It just looks weak. I think that's about the only way I can put it. It just looks weak. You see, we had this line up here at 1884. I'm still keeping that there. But, as nice as it looked like we may bounce on this line a little bit after lunch and then come back for a test up here, instead it just gives it up. It just totally says, I can't do it. So where does that leave us? Well, I want to do just a couple quick things. Again, we have not busted down through our support. If we do, then we're looking in all likelihood at the very low 1800s or 1790s as a minimum downside target if we break down to the downside. And I hope I've been clear, that is a distinct possibility. This is something of a Rorschach test. If you're a bull, you see this big kind of inverted head and shoulders pattern back here, even though it doesn't have a very much of a right shoulder, and you're saying, well, we should get up to 1958. And because we're still above our support area, that's still a possibility. But if this support gives way, then if you're a bear, you're looking at either a double top or possibly a more standard head and shoulders top with left shoulder, head, another head, then the right shoulder. It could go either way. It really depends upon which level breaks first. If we break, let's just call it 1840. If we break 1840, then I think at least 1800 is a reasonable downside target. If we break this line here, then I think we still have a reasonable target of the low to mid 1950s. And here we are for a month now. We have been between these two areas. So really we've been range bound for 1, 2, 3, a little bit. Well, actually, we could go back here, excluding this little dip in very early March. We could go back for more than 4.5 weeks and say we've been range bound. So, guys, all you can do, I think, is wait and see. Wait and see. to give you maybe a little bit of help, I'm going to change a line here. We're going to take this line, since we have this off of our low here. If we move this to our low on the 24th, you can see that where we stopped today almost lines up with that. But you know, that's kind of this doesn't really make any kind of particular pattern. You might say, well, it looks like a broadening pattern. Well, not really, because we don't have, when we move this line here, we don't have a deep enough touch down here before that higher peak got reached. So I don't think you can call that a broadening pattern. That's just kind of interesting. I'm not going to leave that there. I'm going to leave this right here where it was, because I think likely this may give us a little bit of resistance, even though I've changed the color of this line to a light orange, because we have been pretty much trampling, running up through it, running back through it, running back up through it, running down back through it. So it's a permeable thing. So that's why it's a light color. Honest to goodness, I'm having a hard time finding anything other than the few patterns that we're looking at that gives me any clue as to whether we're going up or we're going down. One thing that I will remind you of, if we back out again on a 30-minute chart, we have this trend line right here, which has a pretty good set of data to construct that. And then we snapped a parallel line down here, and that parallel line happens to be running through right in the middle of our little fuzzy neckline area. So hey, maybe we get a bounce down here. Maybe we're going to come down, tag this line, and then bounce back up and start to firm up. But right now, it's a tough call. Having been range bound between roughly 1883, 1884, and roughly 1840 for 4.5 weeks, you know, whichever one of these goes first, that's the way the market is going to go. If we break out of here, then we have a short-term target that is, well, hold on, let me see if I can move that real quick. We have a short-term target of about 1927. And then we have a longer-term target, like I said, of about 1958. If we break through this cluster of support, then we would be looking at, like I said, a move down to at least 1800. And just one more thing, we do have also a descending line of support right here. And I'm going to make that purple because maybe this is a little head and shoulders top if we break through this line. So that all adds to the importance of this 1840, 1850 area. I really think that needs to hold up, or we're going down to the low 1800s or even the 1790s as a minimum target. So guys, that's your video for March 26, 2014. Please believe me when I tell you, I wish I could look at this and say there's a 70% chance we go up, or there's a 70% chance we go down. I still lean a little in favor of a bullish move, only because we have that large inverted and truncated head and shoulders pattern underneath us. But the S&P has not had the strength and the giddy up and go that it's had in the past when we've seen these patterns. So this is looking a little suspect. So let's just keep our eyes on it. Thanks for watching. Take care.